Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to analyze the Q4 numbers of EICHER Motors and what lies ahead for the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with the Q4 numbers, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel and will help you also ask me questions each query, one query per day if you take the $10 Patreon membership. For detailed market and company analysis, and if you have a number of stocks for me to analyze, then kindly email me directly. Also, you get access to exclusive articles and posts that I put up on Patreon that are not on YouTube. Now about EICHER Motors, and here's a small snapshot of why it is regarded as one of the best companies in the stock market. It has the charisma and the brand. So the EICHER brand has been going along pretty well. The Royal Enfield brand has been going along pretty well for the last 20-25 years. It has been an aspirant for young India to buy an EICHER Motors bike, to buy a Royal Enfield bike, and many of the individuals who start their job look for buying a bike, and that is a benchmark for their success in job, in their salaries, in their, you can say, profession, if they end up buying a bike. So this has become a status symbol as far as young India is concerned. More and more people are now getting into buying it. More and more people at the young age between 25 to 35, between 20 to 30, are looking to buy into a Royal Enfield because more and more people are having the disposable income. So this is having an aspirational value more than just a brand, just you can say a luxury that anybody wants to have. This has become an Apple of India. So just like you want to buy an Apple iPhone, and Apple is from US, so this has become something of that sort. Management and pedigree of stock is also there, so the stock rarely falls big. Probably 20 to 25% decline can be seen, and after 2011-12 start, when the stock started to move up, after that we have not seen the stock go down that much. Although before that the company was not doing that well, and I think the acquisition of Royal Enfield came about around that 2010-11 period, or around about that. So that has changed the scenario of EICHER Motors altogether. There is complete leadership in this space in the high end bike segment, and increasing market share. So they are increasing market share even in the downturn. They are increasing market share a great deal in very good economic condition. Return ratios are exceptional, about 20-25% on ROE, ROCE, net profit margin basis. And they have performed, the company has performed under difficult domestic and global economy. So it has not been a scenario where, okay, for the last 2 to 3 years the domestic and global auto segment has virtually stalled even before the pandemic hit, and even then Royal Enfield came out with decent amount of results in the first 2-3 quarters of FY20, and the last quarter, this quarter, it has plummeted just because of those 10-15 days, or the last few days in which there was global, you can say, pandemic scare, and so global sales went down sharply, and even the Indian sales went down in the last 10-15 days of the March, you can say, month. If we look at the Q4 snapshots, then the profit is down 44%, and that is understandable, and perhaps the market is taking that in. The revenue has dropped by around nearly 12%. The major point here is that the Royal Enfield sales has dipped around 17%, which is not huge considering that the sales have been dropping in the last 2-3 quarters. it was expected that the sales would fall sharply, and we saw a 17% drop in sales. Overall demand will remain sluggish, and that has been told by the management in their con call that they see that next 2 to 3 months the demand could be sluggish with the kind of situation that India is going through. It is for sure and understandable that not more people will go ahead and buy a bike in this kind of a situation. So at least for the next 2 3 months, even I believe that the next quarter could be under stress with respect to sales and the numbers scenario. Overall market share has increased to 27%, a rise of 200 basis points in the above 125cc segments of bikes. That is that is commendable considering what kind of a situation that we are going through. Expected to add around 600 more studio stores, so small stores, studio stores, that they have been adding for the last 2 3 years. Ever since the slowdown has hit, they are going to continue with that, and we're going to see expansion in that regard throughout FY21. So new product launches will start from say the July month. So as quickly as next month, new product launches will come in, and it had been hampered for the first quarter because of the pandemic. So maybe by the end of July they'll start, or early August they'll start considering and analyzing what is the situation of at the what is the situation at the ground level, and they are saying that they'll continue to have new product launches for the next 3 years, every quarter something or the other. Although capex and capital expenditure would complete by FY21, so one will see a reduction in capex sharply after FY21, and probably in FY22 and end of FY22 we'll see no capex, so that expenditure will go away going forward. They have opened around 35 more stores and entered three countries: Belgium, Italy, and Korea, and that is also a strength of on their part, that they have continuously gone ahead and did something for the business to get better and expand into other geographies, that whenever things normalize or stabilize, they're going to do even better with in terms of sales and profitability. uh, Coming to the truck segment, the commercial vehicle segment, it has continued to stay dull, and over the last 7 8 years we have seen how these numbers have plummeted for all companies, not Eicher, but even Ashok Leyland, you call it other companies which are not listed and into commercial vehicles. These numbers have gone down sharply. So CV revenue has dipped 40%, EBITDA margin has dipped by 430 basis points, and market share in the heavy commercial vehicle segment is 5.9%, whereas in the you can say low and medium commercial vehicles, we have it at 30%, which is quite reasonable considering there are other unlisted players, there are other unorganized players in this market, and yet Eicher commands a 30% market share in this segment. One more thing I want to add here, that the company has come out with an option of a split. So a 10 rupee right now face value stock would trade at 1 rupee face value stock. So you will have the stock at perhaps what something like you'd get the stock at 1700 rupees rather than 17,000 rupees if it was trading at. So that would increase the liquidity, that would bring in more investors, that would be more retail investor friendly, and more people can get into the stock and liquidity will increase. So they have approved that, waiting for the approval from the shareholders with the voting rights and etc. But I think that would go through in the next 2 to 3 months. So we'll have a 1:10 split, and probably the stock trading at a valuation of around you can say at around 1700 rupees. So as I was saying, that the split would come into place in the next 2 to 3 months. So let's see how the liquidity will increase. We'll see after that how people will get in. I am of the opinion that more and more people will get into the stock, and there will be greater demand for the stock. So that is also a fillip going forward for the stock to move up. Coming to the threats and issues related to this industry and the company, so there are threats at the moment, and that's why the stock is down 50% from the highs, and more higher grade investors are keeping away from the stock. They believe that these threats would go away in the next 1 to 2 years, so there's still time to get into the stock. So plummeting sales with a meager truck demand is may continue for the next 1 quarter, maybe 2 quarters, and that is a threat that might not revive. RE sales to hit as global salary slump. Now, this is a bigger threat because if I combine this point with competition from Bajaj and Hero, so Bajaj and Hero coming out with more bikes, and they're coming out with cheaper bikes. People would look to buy in the rural areas something like a Bajaj or Hero rather than going for an Royal Enfield. That could happen, and they could lose out on market share, although it has rarely happened over the last 7 8 years. But we are in a very unprecedented situation at the moment. So Royal Enfield sales may hit big time over the next 2 quarters. But what I believe is that if you are invested in the company for the next 5 to 6 years, then I don't think you need to worry, because things will bounce back for Eicher. And the management is such, and they are so innovative with regard to their product development and launches, etc., and everything else, that they will come back big time once these things normalize, whether it takes 6 months, 1 year, 1.5 2 years. So if you have a good 5 6 year time horizon, then these threats would thwart away. But yes, these are the threats and issues that are prevalent for the next couple of years. Effect on production and capacity utilization. So yes, capex is going through. Capex may finally complete by second half of this year, but if things doesn't normalize, and everything doesn't come back or like the way we had probably last year in terms of Royal Enfield sales, and if things doesn't improve in terms of infrastructural you can say expenditure, so that trucks are sold even more, then this capex may just go waste, and there will be more fixed cost for the company, and hence the company would suffer in terms of final profitability and margins. There's another question of, will the demand bounce back, and I'm talking of the demand of the Royal Enfield rather than the heavy commercial vehicle, because that would definitely be under stress. If the salaries of people do not increase, if there are no more jobs for the youngsters, and if globally there is pressure in terms of salaries and jobs and businesses, then there could be a long term threat coming for Eicher Motors, that the stock may not perform because numbers will continue to be subdued. So these are the major reasons. Will things be the same again after the virus ends, after everything comes back to normal or not? Whether people will still look to buy into aspirational things like gold and Royal Enfield, etc. These are all, you can say, confusions, conundrums in the minds of investors, and that's why the stock is currently down 50% from the highs, and had plummeted something like 40 45% from the February levels. So this is my take about the stocks. Next 12 months, just take that the business may remain under pressure, and you could see another 3 quarters of bad numbers at least till December, and numbers could continue to gradually go down, even miss estimates of industry experts, and that would happen. And I think market has priced that in, that over the next 2 to 3 quarters, numbers in the auto industry will remain very tepid. So any positive in those numbers, any positivity that comes out, the stock will bounce back very sharply. So this is a different scenario altogether. This is a scenario of sell on news, buy on rumor kinds. It has been sold already, because the news will be negative for the company, for the sector, for this industry, for the next 3 quarters, 4 quarters, and so it has been sold drastically. The stock fell from In the last 2.5 years, the stock has fallen from around 34,000 levels all the way to 12,000 levels, 12,800 or so, and had bounced back. Maybe it will remain in a range for the next 3 to 6 months. Maybe it can bounce back to 20,000. I don't know. But I feel that major portion of all these factors that I'm mentioning in terms of negativity has been priced in at 12,400, 500. So yes, the stock can definitely fall from here by about 20-25%. That can happen. It can go back to 13,000, 13,500, but it looks difficult because already the prices have plummeted. Markets may have already priced in all these things, and on a 6 year basis it is coming at a 30% discount, easily 30 to 35% discount. So if you have a 6 to 8 year time frame, these are the times to accumulate the stock over the next 6 to 8 months and just stick with it for the next 5 to 6 years. So this was my video on Eicher Motors. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.